Most people believe the stock market is a complicated game that only billionaires, hedge funds, and financial insiders truly understand. They assume the wealthy have access to secret strategies that ordinary investors will never discover. But what if the real advantage isn't a secret stock, insider information, or a hidden loophole? What if the biggest wealth-building principle used by many of the world's richest investors is actually available to everyone, but ignored by most people, because it seems too simple? Today we will talk about the stock market secret billionaires don't want you to know in 2026. So before we get started, make sure to hit that like button, also subscribe to my channel. 10. The real secret is that there is no secret. Many people believe billionaires have access to a hidden stock market strategy that ordinary investors can never discover. They imagine secret information, special tricks, or a formula that guarantees millions of dollars. The truth is much less exciting, but far more powerful. Many successful investors have followed the same basic principles for decades. Buy quality businesses, manage risk, remain patient, and allow investments time to grow. 9. They think like business owners, not stock traders. One major difference between wealthy investors and average investors is the way they look at stocks. Many people see stocks as numbers moving up and down on a screen, constantly searching for the perfect moment to buy and sell. Billionaires often think differently. When they purchase a stock, they see themselves as owning a small part of a real company, with products, employees, customers, competitors, and future growth potential. 8. They use time as their greatest advantage. The biggest advantage many billionaire investors have is not that they can predict the future. It is that they understand the power of time. The stock market can experience crashes, recessions, economic problems, and periods of uncertainty. But throughout history, long-term investors have benefited from the growth of successful businesses and the effects of compounding. 7. They buy when others are afraid. One of the most common patterns among successful investors is their ability to remain calm during market downturns. When headlines are filled with fear and investors are selling their positions, stock prices can decline significantly. While every market situation is different and some companies face permanent problems, experienced investors often look for opportunities when strong businesses become available at lower prices. 6. They do not chase every new trend every year. There are new investment trends that attract massive attention. Some involve new technologies, popular industries, or companies that seem capable of changing the world. While innovation can create valuable opportunities, billionaire investors usually avoid buying something simply because everyone else is excited about it. 5. They protect their money before trying to multiply it. Building wealth is not only about making huge returns, it is also about avoiding devastating losses. A person who loses 50% of their portfolio needs a 100% return just to recover to where they started. This is why successful investors pay close attention to risk management. They avoid putting all their money into one uncertain investment, maintain diversified portfolios, and understand the possible downsides before focusing on potential profits. 4. They let compounding do most of the work. One of the greatest financial forces in the world is compounding. A small amount of money invested consistently can potentially become a much larger amount when gains have time to create additional gains. This is one reason many billionaire investors started investing early and remained committed for decades. They understand that trying to get rich quickly often leads to unnecessary risks, while steady growth over a long period can create extraordinary results. 3. They continue investing even during difficult times. Many investors become excited when markets are rising because making money feels easy. However, the true test of an investment strategy comes during difficult periods. Market crashes, economic uncertainty, and negative news often cause people to stop investing or sell their holdings. Successful investors understand that challenging periods are a normal part of the investing journey. 2. They focus more on their behavior than market predictions. Many people spend endless hours trying to predict what the stock market will do tomorrow, next month, or next year. The reality is that consistently predicting short-term market movements is extremely difficult, even for professional investors. Billionaire investors often spend less time trying to predict the market and more time controlling their own behavior. 1. The biggest secret is that ordinary people can use the same rules. The number one stock market secret that billionaires do not have an exclusive advantage over is that the same fundamental principles are available to everyone. An ordinary person with a small amount of money can invest in quality companies, contribute regularly, control emotions, think long-term, and benefit from compounding. Wealth is not always created through complicated strategies or access to private information. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.